Rod Kusanen, Spooman for Risk, recap of the trading activity from October 18th, 2016. All times are Central Standard. We have the settings of the indicator at 5 and 2 for the pivot settings. That's very important, as this represents how we might start an actual day. Because you want to be able to see the trend lines propagate quickly, and using a 5-second chart, that's necessary to use a very short right strength. Now when we're looking at the actual trading, we would use this kind of setting. When we're just discussing how things developed, we can just show it to you using a much larger right strength, so that we don't spend a lot of time going over all of the details. But those details can at times be important. So we'll take just a couple of examples of the initial trade activity and a few explanations. So your first obvious opportunity for sell is in this overbought situation right here. And that works quite nicely as it moves up to this upper value area. And we get a nice sell opportunity here. Now, the LT, the low threshold level, is way too high at the moment. And we're going to need to adjust that. The only way to adjust that is to change the start time. So we will have to do that. But nevertheless, you can still read the indicator if you understand how the nomenclature here for oversold and overbought. So what we normally look for in an opportunity to buy is a stepped up oversold level of the premium. And you can see that that situation exists. Not that we would necessarily trade this, but it does come down and makes a nice bounce off of this level right here. You can see the stepped up oversold, oversold, and another little oversold situation here. But then she drops down again and then steps up right there. And in the presence of this particular bar here on the ES, right, we're in an overbought situation there above this previous overbought condition there. That may be read as a potential footprint for where the ES might be going back up to 36.75, which it finally does there. It leaves another footprint, but that's compensated for over here with a final drop at the same price right there. Okay, so there's your overbought situation, and the market indicates it's coming back down. But you continue to see how we've got an overbought situation there, well, pardon me, an oversold situation here at 625. Then we tag that price there, and we're at 628, so we're a little lower. And if there was any confusion about where to trade there, taking the short there and then being able to see that the premium has really dropped down substantially here pretty well indicates this market is coming down. Now, as this market comes down and strikes a new very low OSS, OSLL, and we're not, this is just referring to oversold, but a lower low situation on the ES. It's a lower low, and it's an oversold condition, but it's way too low, and therefore we recommend that we wait until this premium steps up at either a lower low on the ES or an equal low. But what you wind up getting is a equal low over here and a higher low on the premium there. And that gives us a buy opportunity. And the reason we would normally say this is a buy is because technically we would like to suggest a change in the start time to correspond with this low level on the premium. So what we would do is check that time, which is 8:51, and now we would change the start time and you see that this OS now appears here as an OS rather than just an OSLL. It's a true buying opportunity. And you get another buying opportunity right in there. And the market then begins to step up to a degree. The question is whether this is over. So let's move forward. Now, the chart looks rather busy, and for many it might feel that this is too busy, but in reality, when you're trading in real time, this is not as difficult to deal with as it might appear. And in fact, it's giving you very vital information as you're moving along. Because what we want to see happen here, if this rally is going to continue, because there's a direct relationship in the premium to the ES, we need to see higher highs on the premium as well as higher lows. And when that's failing, you've got a pretty good indication that something is about to change. So as you read the oversold conditions, they should be moving up. You've got your buy-in here, you got your buy-in there, and then all of a sudden you get this big drop. So now you know that price is likely going to get tested, and it is. But when it is, the OS level moves up again. Now it moves back down to a higher low compared to where it was here, but it's a lower low compared to all of the other thresholds in here. And that's somewhat of an indication that that price is that's going to get tested as well. But shortly thereafter, the market continues to move up again. Now what we need to see happen here is the OB levels moving up as well. So from this point of view, we get a higher OB here, higher OB here, higher here, as well as higher here. And that is in agreement with the OS moving up as well. But then almost immediately thereafter, we get this fairly significant drop in the premium right there. There is your overbought condition that really results in a sell opportunity. Now, you don't see it as that. You don't see this as an OS or pardon me, an OB situation, because the HT level which was set way back here. Okay, this HT level, how can we put this to you? It generated an OB situation right there, and that meant that in order for us to get another OB, we have to get a premium threshold level that's under that, and that's not appearing here. So whenever we move up above the HT, It's discretionary, but we often recommend that we change the HT to correspond with a new high on the premium. So if we get an OB that's greater than the HT, we change the start time. So 9:02 would be the start time change in here. And then we get another OB here. But we're still moving up. We've got a new oversold condition there, so this is continuing to move up. And then we get another OB above that level there. So changing the start time to 9:10. Now results in an OB right there. Once you get the hang of how to read this, it's not so important to make all these changes. You can see where you should be changing. But for our clients, we want to help them to understand how this system is working. So we're going into a little more detail because many of our clients view these videos for instructional purposes. Now, as this market moves down, you can see this LT that was established here, which is way high. We see the OS levels dropping way below there, and finally right into here. So we would change ultimately the start time again to correspond with this level. And when you do, then you're going to see OS levels showing up here. So that will change the order to 9:22. And you can see this is a true oversold, and even a better oversold condition right there. And up we go. So once again, what we want to see is the OS levels moving up and the OB levels moving up as the market moves up in tandem. Now, to move through this a little bit more quickly now, we're going to change the right strength for illustrative purposes only. So, look at the OS stepping up. It moves down a bit. It's not enough to be too much of a concern because we get back to moving up right in here. Okay. But then we're moving down again, and that's a bit more of a concern. Okay. This is a bit more of a concern. And so as we see that this level dropping to 644 could indicate that the market's going to come back. We just have an eyeball on that. And you notice that as we come up to this level here, just almost to this descending upper value area, the premium says that we're overbought, and that becomes a sell opportunity, or at least an opportunity to tighten the stop on a long trade. And incidentally, we also look at these ascending higher lows in association with the premium as buying opportunities as well. Buying at a higher low. It's very specific. Taking a sell here, however, causes a profitable trade, or generates a profitable trade, and then we finally do drop down a bit lower than this price on the premium associated with that lower OS level. And then as we move up again, we get another OS level here. And that's a bit of a concern. Now, it is technically an OS. And in most situations, we would suggest that this is a potential naked bar situation, where this level, although as you can see here, this low, this low, this low, and this low, all right, those four levels are ultimately moving up. So there's the divergence that's developed in here at these prices. Okay, but it's still lower than this level here. Now, should it be? Technically speaking, it should be, because this is a lower low compared to over here. So that's the only reason that we might say, okay, this is okay to get in on a buy here. It is lower than this level here. So it too should be lower, using a direct relationship, and it is stepping up. So, but it's also a little bit of a concern. Be nicer if it was way up here. Now, we go ahead and we continue to move up. And as we move up on this bar, we get another overbought condition on the premium, but it is higher than the LT. Now you can see a little bit of a divergence as the market continued to test these prices. The premium started coming down enough to, at that point, potentially get into a short. Now that's not plotted here because of the right strength, but you can see the drop there. Now this little bugger suggests that we're going back up. Nevertheless, you can look at the lows and you can see how the lows are moving down. And so we get this retracement back to 32.25. And then we test that price, and you can see the lows of the premium over here, and then how they're stepping up right here. This was the same, the ES price here and here and here was the same price associated with this low on the premium. And you can see how the premium has now stepped up at that same price and allows us to see a nice rally thereafter. And higher lows, higher lows, higher lows in oversold conditions that allow us an opportunity to get into this long trade. Now, as we move up here, you see how the premium steps down to an overbought condition with a lower high on the premium. That's either to be read as a short or potentially tightening the stop. Now, as we come down, we get a much lower level on the premium right there. And that's a big signal. That's a big signal that there's something wrong with the situation that's developing here. We shouldn't be this low. So what I'm going to do here is draw a line at 34. Because this is really out of sync. Higher low, higher low, higher low. This is a higher low as well, but this is a much, much lower low. That's out of sync. Doesn't look right. And often this would be associated with a naked bar approach where we would expect a return to that price. So we have to be very careful now as we move back up. Now, we do get a step up on the premium here, and here, and here, and here. Goes right up just the way it's supposed to, and we get this real nice move up on the premium, further indicating that this market is moving higher. But it's also, there's a big caution up here, big caution, because of this drop here. So in situations like this, we have to be very careful about thinking whether this is going to move up. If it's going to continue to move up, the highs of the premium need to correspond. And if they don't, that's a big reason for us to consider taking a short. Now, if you look at the yellow lines here, here, and here, and here, see how they're stepping? This is stepping up, but that's stepping down. There's that is the pattern to short. And so right there, you've got a short opportunity at 38.50. It shows up quite nicely. Now, what we can do to make that show up as an OS is to just change the start time. And as we do have several instances of that, we could change the start time to correspond, say, with this high right in here at 10:32. I think that will work. All right. So now this shows up as a buy opportunity. Okay. We're at 38.50 here. And we're at 38.50 there. Okay. But what is a real strong reason to take that also as a short? It's an overbought situation. It is a higher level on the premium compared to what it was here. But right in here, there's a telltale situation, which you're not going to be able to see with the left strength as significant as it is. But we showed this to you in real time. Unfortunately, we had the microphone off. There was a glitch in the setup yesterday's live recording. But I'm going to show this to you again to show you where the premium levels were right in this period of time. So I'm going to change the right strength so that it's a little easier to see. Okay, so what we're concerned with are these four pivots in here. And look at the where the premium is here. Now we're up here, then we're down, then we're slightly up again, but we're still lower than the original. And then we're down one more time. So that little routine of up, and down to a lower low says this is coming down. And so in a live recording, we recommended that this was a good opportunity to short this thing. Good opportunity to short it because of what had just happened over here. Now, unfortunately, that's as far as we were able to record yesterday because of other obligations, and so we didn't actually short this. We were out of a long trade at that point. But yeah, that was beautiful, beautiful read on the premium. Now we'll finish this up as we short this move up here. Remember the 34 level on the premium, or on the ES here. Look what happens. Before the end of the day, we've dropped below that level. And so that, in conjunction with what happened right in here, was all you needed to know this thing was coming down. And then as we do come down, you see these big drops in the premium on the way. Here, and then again in here, and then again in there. Big drops in the premium, all indicating that we're coming down even lower. And there you have it. Now, what could you have anticipated the need to short that if you had not already done so? And the answer is obviously yes. Let's show you how. Now look carefully at the OB level here. The OB level here is at 579. As the premium moves up here, ES moves up here, the premium level at the pivot does not change. It's still at 579. It should be higher, but it's not. And so that's a divergence. It's right up to that upper threshold level. Premium is not higher at the pivot, and therefore, time to come down. And come down it does. Now, as it does, we get this situation develop on the premium again. It moves up to 561, and then to 560. So this is going a little higher. And when it finally does go a little bit higher, at that moment the premium drops from 560 to 566, and there's your pivot again. So if you hadn't gotten in here, you certainly had reason to get in there, because you knew it was coming down. And there's our recap. All right, if you're not familiar with this system, it's the best system out there. I challenge anyone to say differently. This new indicator reads the premium so well. Once you understand what you're looking at and how to read it, how to interpret it, you've got a massively beautiful opportunity to take trades, very accurate entries, and there's just no better system, because there's no better indicator out there than the premium, and there's virtually no one out there that's teaching you how to read it. We not only teach you, but we now have an indicator. This has taken us years to figure out how to actually generate an indicator that will do this. And we've been trying to teach it manually, but we finally figured out a routine to plot this in a way that could be interpreted, and now we've got it. It's beautiful. There's no commercial indicator out there that will do this. There's some that come close, as the one that we see down here, but it doesn't give you any real context for it. And this often has to be optimized in order to really get a clear picture. So this works. It's beautiful. So come take a demo. I'm Rod Kusin, Spoon Man for Risk.